Dani, there's a quote at the end of your piece, which you've written on this, which is kind of really nice. Comes from the head of U.S. quant analysis over at Nomura. What you're observing is a panicked market. You have people panicking to get into these stocks because of a fear of missing out. It's a lack of rationality.
Exactly.
Walk us through what's going on.
Exactly. So this can sometimes feel like a little bit of a wonky territory going into what quants are doing, but this is really important to understand what's happening in the market right now. So this strategy essentially says if you buy stocks that don't trade as much, are less liquid, you'll make more money because there's an extra risk you're taking. You'll be rewarded for that. But currently, if you're investing in the most liquid stocks, the ones that are trading the most, you're right now in the past 2 months making the most money on that trade since 2009. And the reason that that's troubling is because stocks that are traded very frequently shouldn't be rising really fast. It has a sense of...
Momentum and liquidity shouldn't go necessarily together.
Exactly. I mean, if they're trading a lot, then there's a sense of panic within those shares. So usually panic is accompanied by falling shares. So if it's not happening that way, then maybe what's happening is a little bit of that same sentiment around Bitcoin, a bit of speculators jumping into the market, trading these things really quickly, being afraid of missing out and jumping into these shares and pushing them up the most since 2009. So if they're speculators, then they're likely to jump out pretty quickly as well. They're somewhat of finicky traders.
You've got a chart. Oh, there we go. We've got the chart up. It's 9404 if Bloomberg users want to check it out in the BTV library. This shows, though, obviously, that these things change very quickly, Dani. So what does this mean for the rest of the market, the non-quant investors? Why should they care about this?
Well, you should care. Look at where those other gains are on those charts. Those are coming off of bear market lows. Very different environment we were in when these very liquid shares were doing well. So we actually don't have a lot of history to compare this to because we are in uncharted territory here, which you can say that a lot for the U.S. market. But the reason that non-quant should be concerned is when you look at these stocks that are gaining at higher, it's chip makers, which are quite popular right now. NVIDIA, for example, are one of the stocks really carrying this higher. So if you're relying on NVIDIA in your fund, in your portfolio, you should be aware that because of this chart, it is very likely that there are other investors who've been bidding this up that are speculators, essentially, and that at the first sign of panic might leave. A good example of that last week when Texas Instruments had a poor earnings report, the chip makers in the U.S. market fell by about 2.4%. So these things can sell off quickly. So if it's in your portfolio, you should absolutely be aware of that and maybe take out some protection.